I'm Priscilla Barrera with the Investing News Network, and here with me today is Ken Hoffman, basic materials expert at McKinsey. Ken, thank you so much for joining us today.
Thanks for having me.
All right, so we're here at the Lithium Supply and Markets Conference. What is your main takeaway so far?
Well, I think, again, it's very exciting times for the lithium market. A lot of people here meeting investors and companies, a lot of different ideas. I think the perception that it's going to be a good market, the EV market's going to do very well, is quite solid. I think it's all a matter of timing, and will there be any disrupting technologies that impact this market?
All right, and as you're saying, there's a lot of talk about the upcoming battery technologies and how they will impact the demand for raw materials going forward. What are your thoughts on that? Will the market see a different type of battery in the near future?
Well, I don't think in the near future. I think right now the auto companies who really need to plan out their battery technologies for the next 3 to 5 years is pretty set. The battery technology that I think we'll see pretty solidly for the next 5 to 7 years is a nickel-heavy battery, the NMC or the NCA battery that Tesla uses. That seems to be where the battery industry is going. Different types of that. Some of them use more nickel and less cobalt. But in general, that battery technology we see as being the predominant battery until we get into the 2020s. At that point, things start to get more interesting because there's a lot of furthering of the technology that could impact the market.
All right. And you're talking about more nickel in the batteries, I guess. The question was, which promising other battery chemistries can take over from the lithium-ion battery for the electric car market? And in particular, what is your opinion about solid-state batteries?
Yeah, I think at the moment we're pretty well set in a battery that will use lithium, cobalt, nickel, and probably manganese. A couple of very interesting technologies are out there in the semi-near future. For example, BASF said at the nickel conference in Toronto recently they have a battery that is very heavy on manganese rather than nickel and could be low or no cobalt. With a cost relatively half of the current material cost of today. That will be really interesting. Solid state, I think most people agree, will be the next gen area. Solid state has a lot of benefits, including it's a lot lighter because there's no graphite, and smaller space. And if you want to read about Samsung's article, and I think the journal Nature Conservatory, they really talk about it's a graphene-doped battery that's solid state, has 45% more energy capacity, and can last or can be charged in under an hour. And your cell phone could be under 12 minutes. That type of stuff, I think, is what get people very excited about the market. And I think for the longest time, the battery market was looking for, what's going to change to make the EV real. I think we've seen it now. The batteries are real. They are giving really great technology. We can see it in the Tesla with, I think next year we'll have a 1,000-kilometer range car, that it's here to stay. It's just a matter of evolving the technology into new and better technologies, which gives us faster charging and more range.
And yesterday you gave a presentation about lithium myths and realities. What do you think is the biggest myth in the space?
I think the biggest myth that people miss is that it's not one lithium price. The lithium market will really diverge into a whole bunch of different chemistries, different purities, and so from a lithium producer standpoint, they have to understand, do I just make a generic lithium carbonate? Do I make a generic lithium hydroxide? But more likely you might see is each car and model will have a certain type of lithium hydroxide with XYZ impurities, and those who are able to win the most automotive contracts probably see the best margins. So from that standpoint, I think people need to back off from it's just a lithium overall market to really go down deep into the different, what are the producers selling, what are the buyers buying, and how the matchup in supply and demand for each one of those categories, how it sort of works.
Right. And speaking about prices, what is your outlook for lithium carbonate and hydroxide prices going forward?
Well, our very long-term view is that we see lithium prices in what we would call a brownfield area, and that is, that prices will, probably be in a range of, for carbonate, in the $10,000 to $14,000 range on a very long-term basis, meaning that it won't be the collapse that a lot of Wall Street analysts are sort of talking about. It may not be the super high prices that the bulls are sort of looking at, but it will be sort of within a range that make strong economic profits for the lower cost lithium producers. And again, within those lithium producers, you could see significant price differentials if they are producing a very high quality material that the battery producers deem they need for that specific chemistry.
All right. And looking over to demand, many predict lithium demand will increase in the next few years. What is your forecast, and will the market see a surplus, deficit, or will it remain balanced?
Well, I think it will be pretty lumpy in terms you will have years where you'll see significant surpluses and deficits going back and forth depending when the new material is coming online. Our 2030 forecast, we see demand rising from today's around 220,000 metric tons. Our base case analysis says that will be about 1.3 million metric tons. Our aggressive case analysis said that will be about 1.9 million metric tons. Either way, it's a very significant increase. We're very happy to see that the lithium industry has already responded with a lot of new capacity announcements. The devil in the details is going to be when does it come on, at what quality, and will again you see like as in the iron ore market today, where low-grade iron ore there's way too much capacity, high-grade iron ore there's way too little capacity, and yet people don't look at try to look at the iron ore market as one market. I think the lithium market will be very similar and really sort of bifurcate into a bunch of different smaller categories that we'll really have to analyze.
Right. And in a recent report, you wrote about lithium and cobalt and how supply and demand dynamics could change the future for these raw materials. What are some responses that we could expect from the mining industry based on your study? Is collaboration between miners, battery makers, and financial players likely to happen?
Well, certainly. I mean, at the end of the day, you do need a partnership all along the value chain. At the end of the day, in order for the EV market to really explode, you'll need a price point of under $100 a kilowatt hour for these cars to be competitive and to beat the internal combustion engine. And so for that to happen, the consumers need a low price with a product that fits their needs. The miners need profits, but the car makers can't let them have excess profits. Otherwise, as you've seen, cobalt prices, and why we call it a tale of two commodities, is cobalt prices, going from, $10 a pound to $50 a pound. It forces those making the chemistries to try to use as little cobalt as possible. Elon Musk has sort of said they can take all the cobalt out of the batteries, and the reason is going to simply be price. You need the best quality battery at the lowest cost, and the miners sort of need to work with the industry to make sure that both sides are happy.
Right. And let's talk a little bit about a metal you already mentioned, which is nickel. What is your outlook for nickel, and do you expect any challenges in the sector to be able to supply the specific nickel needed for batteries?
Yeah, the particular nickel grade we look at is class 1 nickel, which is a 99.9% pure LME grade material. It's been very interesting this year. The amount of stockpiles of nickel and LME in Shanghai warehouses have dropped very significantly by a third or so. And I think people are sort of buying ahead a little bit, trying to see that that's where the market's going to go. Most of the new money being spent in the industry is going towards a nickel-rich battery. So, for example, 3 years ago we talked about an NMC 111 battery, which was 1/3 nickel, 1/3 cobalt, 1/3 manganese. Today we're looking at a battery in Western Europe is the 622, so 60% nickel, 20% cobalt, 20% manganese. You were hearing more and more talk about an 811 battery, which is 80% nickel. If we look at Tesla, they're down to as low as 2.8% cobalt in their batteries. So there has been a huge push to put as much nickel into the battery as possible and take out as much cobalt as possible. The threats could be, hearing BASF is talking about manganese, which, we look at the size of the markets. Cobalt's a 100,000 ton or so market. Nickel is, for class 1 nickel, is about a 1.2 million ton market. Manganese is more than a 20 million ton market. So producers are enamored with more plentiful materials that can be used, because then prices won't be such of a problem for them. And that's going to be the biggest risk. First to cobalt, we're seeing that being thrifted out. Could nickel over time also be thrifted out, because manganese could come along and sort of displace it? There's a lot of technical challenges that we see that would have to occur for that to happen, but those are the technological risks you have to think about.
Right. And my final question for you, what's next for the battery metals market? Any other metals that could see their demand increase going forward, which I guess you just talked about manganese, but are there any others or any other factors that investors should keep their eyes out for this year?
Well, interesting enough, in all these batteries that we're hearing at this conference and elsewhere, lithium is being used in all those. So that seems to be, at present, the most quote-unquote safe material going into these batteries. Nickel, I think, is something that is short to medium term is going to be very much in demand as we see the shift. It does come into the 2020s where we get a lot more difficulty in trying to predict the future. I think we will have pretty much a 5 to 7 year understanding of the market. The automakers take a long time to shift. And in fact, I talked to an automotive executive who said that making the wrong battery choice would hurt. It would take a 5-year time frame for them to react to go into the battery that was better that they didn't choose. So I think we will be able to see pretty well the evolution of the space. The wild card is always China. When we were in China recently, the government was talking about all EVs coming out by 2035 being EVs, that no more internal combustion engines were to happen. If China were to switch that quickly, it really would throw up into a lot of our analysis on how quickly this market can move into that space. So watch China, watch the regulations in the European Union. And then from there, we can sort of back into which batteries could win and which materials will go into those batteries.
All right. Thank you so much for joining us today.
Thanks for having me.